It must have the supplier's name, address, and company information. It must have the tax identification number of the supplier. It must say VAT invoice, and it must also have the information of your client. So in this instance, we see Fergie's is the VAT registrant. The tax identification number is also provided here. The location. You also must have the invoice number or serial number. And you must make sure that your invoice numbers are kept in sequential order. You should not destroy any invoices. If there is any invoice that is invalidated or canceled, you should always keep that, still retain that invoice along with your other invoices and show it is void or canceled, but you should not destroy any invoices. The invoice should also show the quantity or the service rendered, the quantity of the goods supplied or the service rendered, the unit price, and the total of that item. It should show the VAT rate, which we know, of course, is 12%, and what the VAT total is on that particular service that you're providing, and the total of that invoice, which will be VAT inclusive. And this is what your client will pay you. And it is important that you provide all of this information, because if your client is a VAT registrant, as is the case here, then your client needs this VAT invoice in order to claim their input VAT from the department. So this is an example of a credit note, which you would issue in the event there's an overpayment, or if you provide goods, if there is a return on a good or something and you've already filed your VAT return, you've already paid the VAT over to the government, you would issue a credit note, and you would receive the VAT that you would have already paid over to the government in the period in which the credit note was issued. So as a part of your documentation, internal documentation, you should maintain input tax and output tax